Article 54, Recoverable Input Tax. 1. Definition of recoverable input tax. Recoverable input tax refers to the VAT paid by a taxable person on purchases of goods and services, which can be claimed as a credit to offset against the output tax, VAT charged on sales, for a particular tax period. 2. Types of supplies eligible for input tax recovery. A taxable person can recover input tax paid on purchases, provided that these purchases are used, or are intended to be used, for making any of the following types of supplies. A. Taxable supplies. Supplies subject to VAT at either the standard rate or the zero rate. B. Supplies made outside the state. These are supplies made outside the UAE, but they would have been considered taxable supplies if made within the UAE. C. Certain supplies made outside the state, specified by executive regulation. Some supplies made outside the UAE, which would have been treated as exempt supplies if made inside the UAE. These cases are further defined in the executive regulation. 3. Import of goods through another implementing state. If a taxable person imports goods through another implementing state, another GCC country applying VAT, and the final intended destination of those goods is the UAE, the taxable person may recover the VAT paid in that implementing state as recoverable input tax. This recovery is subject to conditions specified in the executive regulation. The purpose of this rule is to ensure smooth trade within the implementing states while avoiding double taxation. 4. Goods acquired in another implementing state and moved into UAE. If a taxable person buys goods in another implementing state and later moves those goods into the UAE, the taxable person is entitled to recover the VAT paid in that other implementing state. This recovery is also subject to conditions specified in the executive regulation. This ensures that cross-border movements within the VAT implementing states do not lead to excessive tax burdens on businesses. 5. Input tax that cannot be recovered. A taxable person cannot recover input tax paid under Clause 2 of Article 48 of the Decree Law. This covers specific instances where input tax is excluded from recovery, such as VAT paid on certain non-business expenses or personal use items. 6. Exceptions and special cases defined by the executive regulation. The executive regulation provides a detailed list of situations where input tax recovery is restricted. This may include cases where purchases are not directly related to taxable business activities or involve expenses of a personal nature. It also covers purchases used for making exempt supplies, where input tax is not recoverable. 7. Purpose of Article 54. This article ensures that the VAT system works on a fair and transparent basis, allowing businesses to recover VAT incurred on legitimate business purchases, while preventing recovery of tax related to non-business activities or exempt transactions. For more details, contact us.